The threat of a global trade war has tanked the markets. We've seen red across the stock market in the last trading session. In the last trading session in the US markets, all sectors came down nearly 6%. There was a lot of blood running in the streets. Looking at the fear and greed index of the main market, it reached nearly 0. It is at 4 at present. Since October last year, we've seen more and more fear enter the markets. But there's a secret here. Price is always moving in a wave, and I'm going to show you how you can take advantage of this negative volatility by going long at spot. Let's run the numbers. Hi everyone, I'm Ken from Crypto Trading KS and the CTKS method. We've seen a lot of economic turbulence across the past week. China has hit back at America by launching a 34% tariff. That's going to have the Asian markets on the edge. If you're new, a very warm welcome and welcome back CTKS family. We've seen in a matter of days the outlook has shifted from solid growth to recession risk. More than $6 trillion has been wiped off stock market valuation in just Thursday and Friday of last week. China's retaliatory tariff to the retaliatory tariffs is setting up a global trade war that will be effective as of April the 10th. Over the coming weeks, expect both good news and bad news. Vietnam is working with the US to reduce their tariffs. We're likely to get a lot of economic instability throughout 2025. This is why I've been saying for about the past year, 2025 is the year of the trader. Now, what do traders do that investors don't? Investors have the superpower of holding on for dear life no matter what kind of retracements occur. It is undoubtedly a superpower. And what superpower do traders have? Traders have timing superpowers. They stack probabilities, they look at intercorrelation, interconnection to try to figure out where something is bottoming and where it's starting to turn around. Then they pop in there, well, especially the CTKS family, long at spot and ride that wave up to make small percentages that add up to huge gains. This is a way of making money in any market condition, a down market, a flat market, and of course an up market. And there's nothing wrong with investing, but at this time, when we look at this kind of volatility, I believe this is only the start. Trading is the necessity. There's a lot of economic volatility in the markets, but fortunately we don't have any major economic data releases until Wednesday, Aussie time. And one thing that we need to look out for are the CPI indicators when they get released on Thursday, Australian time, Wednesday, US time. Just as a quick update to the members of the CTKS Method service, the monthly video Golden Opportunities has been released for April. I believe this is the single most important video I've put out in the service so far. It will show you exactly how you need to deal with things in the coming months, and there's going to be a tremendous amount of volatility. It will also give you the edge in understanding where things are bottoming out by stacking probabilities and how much you can make as a result of this negative price action. A lot of people are saying that we may be setting ourselves up for a C19 waterfall rally down. When you look at C19, Bitcoin actually reduced 63.09% across 28 days. Now, fear will have you looking at this and running screaming towards the exits, but courage will have you looking at this. What happened after Bitcoin sold off? A 1,678% increase across 609 days. Now, why is this important? If we listen to fear, fear will always create the absolute worst case scenario. Listening to how everything is going to hell and you're just simply not good enough to just get what you want in life. That's fear's voice, and it's with your own voice that fear says those things. Fear is a scumbag. You need to kick it out of the driver's seat of your life and relegate it to the back seat or definitely into the boot. I talk about fear a lot inside the monthly service video because you need not look at this, you need to look at this. That doesn't mean that we simply hold on here. Now, why is that? You can see it very clearly. If you held on from the top and just recovered, you would make a reasonable 556% return if you sold at the top. So this is example stuff only. But let me just remove this so you can see what you actually missed out on. A 3-to-1 return. The purpose of investing and trading is to make money. It's like going for a $20,000 a year job when you could have gone for a $75,000 a year job. Literally the same job. Fear will have you going for lower pay. And there's something pretty rough about all of this stuff. Fear basically says something of this order. You hold on, you hold on, you hold on, okay, this thing is going to hell, I'll get out. So you don't even make the 556% return. Because you're so shell-shocked, you've got so much PTSD, you basically sell as it's driving itself towards zero. When fear is in the driver's seat, your life will be absolutely and utterly out of control. It's a very sad fact of life, but fear is not our friend. Fear is our enemy, not a friend. So if you think about this, if we got a sell down like we had in C19, this could take Bitcoin all the way down to 33,296. You can imagine if you bought at say 105 and you've seen 105 decay down to 33, you're going to panic like hell. You will probably say, I've had enough. The pain is just far too great, and as soon as something flips up just a little bit, you're likely to sell. This is the fear-based mind. What we do inside the CTKS method, we know that we have a concept, a principle and a principle rule, which is to buy on red and to sell on green. What we do is that we're not mindless and we're not stupid. We look at the cheat sheet, we stack probabilities, we assess momentum, we assess structure, and we assess if the bottom is in or getting close, or if it can bounce to a reasonable percentage when we're looking at it. That is, through active trading. What is most likely to happen if people were to hold through something like this, the vast majority of them would sell. If you held through this and you managed to keep on holding, fantastic, well done. But if you manage to stack down here and to see the red as your friend and use what I talk about inside the service video for this month, there are basically about 6 signs when the market will bottom. And if you're tracking those signs, they're very, very strong signals, and they're released inside the monthly video. The major thing that you need to do is to combat fear. So let's take the case scenario that you bought at the bottom, you sold at the top. Of course, it's an extreme case scenario, but it works to show the difference between methods of thinking. And you just held on, you bought there and you sold at the top. So bought at the top, sold at the top, which is this one, or bought at the bottom and sold at the top, which is this one. So if you put $100,000 in at that 1,678% return, what you would actually turn $100,000 into nearly 1.8 million. If you put the same 100,000 there and you sold at exactly the same time, you'd make a 556% return, and that would turn 100,000 into 656. Now, a lot of people would say that's good enough, but it shouldn't be, because the reason is this: the difference between that 656 and this nearly $1.8 million is $1.1 million. That is life-changing wealth. Now, how do you get that instead of getting that? You look at the red and you make sure that you understand this fear has no place in your life. Only knowledge does. If you can buy on red and do it effectively, you're setting yourself up for an incredible life where this is not a loss, this is a gain. And this is what I talk about a lot inside the monthly video. You must conquer this fear. You must master it. It's vitally important. Fear is not keeping you safe, it's keeping you small. Fear is not saving you from anything, it's costing you dearly. And it gets even worse because what typically happens when you get a cascading sell-off like this, everybody will sell. So not only don't you make this money, you would in all probability lose that money. This is why all investors should trade. So just think about this. An investor can hold on for dear life. A trader looks at market structure, looks at CTKS structure, looks at momentum, intercorrelation, interconnection, looks across the cheat sheet, looks across row 1, row 2, all the way to row 7. They understand where things are turning around, where things are strengthening, where things are weakening. They gauge the market by its own behavior. They don't do story-based analysis, and they don't subscribe to fear. The most important thing that you can do as all of this is happening, and we could cascade down quite a bit, so please be aware of that. And just another thing to understand, this is Bitcoin on a weekly basis. If we get something like a C19 sell-off, it will be the best thing in the absolute world. And that may sound really strange, but can you imagine buying Bitcoin at 33,000? Wow, that would be awesome! But people will simply say, I have no cash. That's another thing the traders vary on. When investors get in, they seek to optimize portfolio performance, or so they've been told by the institutions. And what do? They go all in and typically leverage, so all in and more at a particular spot. And when it retraces, they're usually under leveraged, so they get liquidated as well. But even if there's no leverage in, the concept of maximum optimal portfolio value simply doesn't apply in negative cases like this. Portfolio and capital preservation apply here. The thing to remember is to not look at this, look at that. Don't look at the rubbish that fear will dish out to you. Everybody will be just running around like chickens with their heads cut off at the current time, but not our global CTKS family. We were born in the red. We are so strong as a global community. We have literally been forged in fire, and we understand that these negative price drop-offs, if handled correctly, if handled by looking at intercorrelation and interconnection, by looking at structure, by looking at momentum, stacking probabilities, and the knowledge that you require, these become life-changing wealth beyond any measure. Instead of losing out here, instead of losing 60%, you keep your losses small and you make sure that you're just obeying structure. You're looking at market conditions, you're stacking probabilities, and you're understanding what you're doing. It is not a mindless thing. You can't just take a simple rule, buy on red, sell on green, and then apply it. That's like buying the dip mindlessly. We don't do that. We're very intelligent on what we do. We stack probabilities. A lot of people also say, you can't possibly see a retracement coming. We've seen it coming for a while. The markets have been getting weaker and weaker and weaker, and we knew the VIX had the potential to take off, and it's taken off. And how? But this is all well and good and fine. It means nothing to us, because if we stack probabilities, we can adjust our portfolios accordingly. The monthly video inside the service is absolutely critical to watch. And to let the service members know, all the structural levels have been released on all the charts. We were literally working 24/7 to get everything out. Why? Because we knew what was happening, and we knew you needed your levels ASAP. Please let me know in the comments, how are you setting yourself up to deal with negative price momentum? Or do you feel this is just all going to blow over and it will just ping back up and there will be no problem? I look forward to your thoughts. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.